Good afternoon. I'm Brent Wilsey, and welcome to today's Smart Investing Briefing.
And I'm Chase Wilson. Got a lot to talk about today. I'm sure you're all well aware of what tomorrow is.
What is tomorrow?
November 8th.
Which is what?
The presidential election.
Yeah,
I'm
the
sure
election.
you have heard the media talk about it. I said, I don't know what they're going to talk about after this election. I think they're going to run out of stuff to talk about because it's on 24/7.
It really is. And they'll have Wednesday to cover the results, maybe Thursday after that, what are they going to talk about? But hopefully they'll improve it. So I'm sure you're all sick of it. But we've got some different things to talk about today regarding the election.
No emails or no wall or nothing like that.
Yeah. But what we want to talk about the election is how much time do you spend on voting? And because you got so many things to vote about here, I don't know how much time you spend. I know I spend a lot of time with it. There's just so much stuff to kind of look at.
Yeah, I enjoy kind of reading about it, I guess. And there's so much information out there. And you get to help make decisions. That's the greatest thing about our country.
It really is. You bring up a good point because there's a lot of good things on there, some silly things on there as well. But there's some very important things, not just the presidential election. Actually, for San Diego voters, you had 31 propositions to vote in 10 offices. That's a lot of information to kind of read over and talk about. And I kind of did some math, and these are where the numbers come in. If you spend just 10 minutes on each office and each proposition, you would have had to spend 6.8 hours looking at the voting material.
And there's so much research they provide. And, it's kind of funny. They have this many props out there. I took a look. Some of them are just outrageous. I don't know why they're on there. We kind of said 6.8 hours. They might need to kind of condense that down. Maybe that's why some people don't want to vote. They say, that's too much time. I mean, look at this. This is just kind of silly. We got the supplemental guide to the presidential general election, another sample ballot for the presidential election, and this is what gets me. 223 pages for the California, San Diego propositions and everything. There's a lot of good information in here. I don't know about you, but I didn't read the full thing.
And I did not either, I gotta be honest. And that again, and that's just the props. Then you get all the direct mail. Now, this is just about 2 weeks' notice. What do you do with this? Just throw it away. That's like, the post office gets rich off of doing that. So, again, the question I ask you is how much time do you spend voting? And it's kind of a shame because what they need to do, and this is what we think we want to kind of talk about, is that they need to reduce it down, make it easier for you. Not 31 propositions, maybe 10 at the most, maybe at the most 5 to 6 offices. So you can really do a good job because I don't think anybody is going to look through all this stuff to kind of figure out what is good and what's not.
Yeah, you tossed yours, so I want to toss mine as well.
You can toss yours. Alrighty. Let's get to the part today about the stock of the day, and it's Sonic Corporation. And my other son, National, we love going to Sonic and sit in our cars and eat those big, juicy burgers they got. And you just like the shakes, I think.
Oh, the shakes. They got a lot of different shakes. You always see those commercials. I think the guys are kind of interesting, kind of weird, but you always see the commercials on there, and I always say, hey, there's the Sonic guy.
There's the Sonic guy, yeah. So the stock has done quite well since 2012. Gosh, it was down about under $10 a share. Went up, back down again at $23.93. So let's see if now is a good time not just to eat the burgers, but to eat the stock as well. I guess that's buying it. I'm not happy with this. Sales are flat year over year. That's not good. Earnings per share are up 5.9%. So not too bad on the earnings, but I'm not sure why sales are flat. Look at the current ratio, which the liquidity pretty good, 1.84. Debt to equity, nothing here because there's no equity to the company. We don't like seeing that, do we?
No, not at all. And as you can see, the average for this industry, 330%. So it's definitely a high debt industry. As you said, no equity, kind of jumping around here, but negative $75.6 million to be exact for the total equity, and debt $600 million. Wow. Yeah. And what this company is again, they're another asset-light company because they franchise a lot of their businesses. They have over 3,500 locations and own just 300 of them.
See, what I got to ask here is if you do that, where's the $600 million of debt coming from? Is it coming from the building, the corporate building?
Well, the interesting thing they also do is they actually lease property to some of their franchisees, so that may have an impact on the total debt.
Okay, that could be the situation. And look at the earnings, August 8, 2018, $1.39. Target sell price $22.94. I'm just disappointed with this. I really want to say let's buy Sonic because I love eating that.
Sometimes you can't get sucked in the emotional side of it and buy something just because you like it. Good lesson for you, I'm sure.
I learned that lesson, but that lesson is for you as well. Don't say, oh, I love this company, I'm going to go buy it. No, people say that, oh, I love it, I'm going to go buy it. Understand the numbers because sometimes you can like it, but that's not the case.
Yeah, just because I love I don't know, a new wallet, I'm not going to go buy it for $500. I'm going to look for a good value in something that I like as well. So there's a lot that goes into researching stocks.
Well, thank you for joining us today for our Smart Investing Briefing.
Did you miss today's video live? Tap on the follow button down below right here to opt in for notifications the next time we go live.